Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Let's get you set up for the new week. First, the headlines this morning. Asian shares are mixed and that's on account of China's newest tariff threat against the US. The GST Council plans to exempt biofertilizers from the tax. Bihar Finance Minister Sushil Modi tells Bloomberg Quint that relief is coming for the MSME sector. Kraft Heinz shortlists the Tata Group and Dabur as potential buyers for its India portfolio. That's a Bloomberg exclusive. Titan Company surpassed analyst estimates in the June quarter. The company's jewelry business saw muted growth. And after a blockbuster IPO, HDFC AMC is to list today on the bourses. The issue was subscribed 83 times. Let's turn to the international markets and first talk about the US stocks, which rose on Friday, lifting the S&P 500 to its fifth consecutive weekly gain after a string of upbeat earnings, which helped reassure investors that the market is on solid footing. Abigail Doolittle sums up the key highlights in this report.
Stocks finished higher in Friday's Wall Street session. The Dow and the S&P 500 both closed up by about 0.5%. The tech-heavy Nasdaq flipped between small gains and losses on the day, finally closed at a fractional gain. Now, on the week, the Dow actually finished lower, its first down week in 5, while the S&P 500 had its fifth up week in a row, the longest weekly winning streak of the year. And the Nasdaq also higher on the week, its first up week in 3. Now, in Friday's Wall Street session, the consumer staple space really stood out, one of the top sectors on the day, helped out by Kraft Heinz, those shares rallying more than 8.5% on an earnings beat. Plus, there's speculation about a possible deal with Campbell Soup. Those shares rallied, as did many other names within that space, including Kellogg's, General Mills, among many others. Now, other earnings winners included Take-Two Interactive, the gaming company. Those shares really rallying in a big way, the best day of the year after beating estimates. Plus, there's lots of hype around some of the company's new games. And GoPro, the action-adventure camera maker, those shares soaring up more than 20%, the best day since 2014 after posting a smaller loss than expected, talking about profitability in the future, investors liking it, plus there is a bearish short interest there, so some of that might have been a squeeze. Now, on the day, we had those stock gains for the major averages, but we also had Haven bonds, the yen, and gold gaining, so an interesting lack of confirmation asset class-wise there. It'll be interesting, of course, to see what that leads to later next week after the volatility of this week, starting off with some of that Facebook fallout from last week and then saved to some degree by Apple's strength on the week, up more than 8% after putting up a very strong June quarter and, of course, achieving that historic $1 trillion market cap, the first time that's happened for a publicly traded company in the U.S. In New York, Abigail Doolittle, Bloomberg News.
Now, there are multiple updates in the whole tariff battle between the US and China. First, talking about President Donald Trump's latest. He defended his use of tariffs that have inflamed tensions with China and Europe, telling an audience of diehard supporters on Saturday that playing hardball on trade was his thing. Tom McKenzie of Bloomberg News reports.
Big week for China data, and as you say, President Trump coming out of the weekend at this rally in Ohio, but also in a series of tweets, really trying to underscore his view that tariffs and the actions that he's taken give the US leverage, and saying that he thinks that it is going to win, certainly in the longer term, and is going to open up China's economy. And he pointed for the first time to the impact on China's markets as well, the weakness in the equities, saying that this gives the US leverage as well. Take a listen to what some of President Trump's comments were at this Ohio rally over the weekend.
They've taken $500 billion a year for many years. $500 billion. We have really rebuilt China. And it's time that we rebuild our own country now.
So yes, China very much back in focus for President Trump over the weekend. Of course, last week we had those reports out of Washington that they were indeed considering raising the level of tariffs on potentially the next round of $200 billion worth of Chinese goods that would be hit by tariffs from 10% to 25%. And of course, we also heard that potentially there were talks going on in the background, at least among lower level officials from the Treasury Secretary's team and Liu He, of course, the vice premier here in China. But for the moment, the rhetoric is remaining very strong on both sides, and of course, actions as well, with China unveiling this list late on Friday of an additional $60 billion worth of US goods that could be hit by tariffs in a retaliatory fashion from Beijing.
Yeah, Tom, to that point, what do we know about Beijing's latest response?
So this adds on the $50 billion that they've already outlined. Of course, they have hit back with $34 billion in this initial round of US-China tariffs. We're expecting potentially that the US is going to go ahead with this further $16 billion, and China would then match it. Now, China has outlined this list for $60 billion worth of goods that would be hit if the US goes ahead with these $200 billion that they've outlined. We're looking at tariffs ranging from 5 to 25% on about 5,000 different US categories of products. So the higher end of the tariffs are going to target products like meat, like wheat, but also, crucially, LNG. It's the first time liquefied natural gas has been thrown into the equation. This additional list outlined by China doesn't really do much to add further pain to the US agricultural sector, according to the analysts. But in terms of LNG, there is an impact there, and we saw some of those players in the US markets falling on the back of this news. So that is one to watch. Again, China has said it will not be bullied, it will not be blackmailed, and as you've been discussing with Heidi, we've been waiting to hear some clarity from China as to how they plan to respond if these $200 billion worth of tariffs are put in place by the US. We got a few more details on Friday. Now, of course, we're looking to see what happens with this consultation period in Washington towards the end of August, and then, of course, end of August, early September is when you could get these additional $200 billion worth of US tariffs imposed, and then we're going to see this retaliatory measures and steps from Beijing.
All right, so you've picked up from that about the $60 billion of US goods that the Chinese government is now targeting, but there's also a little more that has happened in the Chinese markets. You have the People's Bank of China that has taken certain measures to make it more expensive to short the yuan, as a result of which you have the yuan gaining a little strength. You know that over the past few weeks it has been under pressure. It's now, as you can see from the chart there, it has gained against the US dollar, so there's a little bit of support coming in for the currency. Let's take a check on some of the other markets in the Asian markets that have opened so far, and the ones that have opened so far are a bit of a mixed picture. In the morning, you have the Chinese benchmarks that have just about opened up. They've opened with cuts of 0.8% for the Shanghai benchmark, and also 0.4% for the China A50. The Hang Seng, though, has opened with a positive bias, up about 0.4%. The three early rises were mixed. The Nikkei was trading with marginal cuts. It's now trading marginally positive. So not the clearest cues coming in from the Asian markets this early in the morning. But I'm sure Darshan Mehta, who's joining me now, has more to tell you about with regard to the trade setup for the day in India and all that's happening in the futures and options space. Morning, Darshan. How is it looking this morning?
Yeah, so as you pointed out, Asia is looking slightly weak in trade, but the SGX Nifty is showing no sign of slowing down. It's trading up almost 32 points. So that's the cue that we lead with. 32 points uptick on the SGX Nifty, indicating that, you know, a slightly positive cue is something that we can expect when we open for trade today. How did the ADRs pan out in trade? Vedanta was up almost 5% in trade. Dr. Reddy's was up almost 2% in trade. ICICI Bank managed to gain. Infosys managed to gain. So these are the major gainers that came out. HDFC Bank is the only one, and Tata Motors over the past few days have been seeing significant amount of weakness in the stocks that are there. Now the Nifty ended up almost 1% higher on Friday. That was and you know, similar performance coming in from the mid cap and small cap end of the market also. So gains anywhere between 1 to 1.5% in trade. The Nifty Bank managed to move up almost 1.2%. The PSU Bank was the best performer. It was up almost 2% in trade. Now, how did some of the sectors that pan out? These were the two sectors that did well in trade on Friday: metal as well as media, up anywhere between 1.3 to 1.6% in trade. Now, how has this month panned out so far? The Nifty Pharma is up 3.5%, PSU Bank is up 1.6%, and small cap is up almost 1.5% in trade. The Nifty Bank and Nifty Auto seeing weakness. The Nifty Real Estate also seeing significant amount of weakness in trade that came in. Now, how did last week pan out in trade? The Nifty Pharma was up almost 5% in trade, so significant amount of moves that happened. The PSU Banking Index was up 4%. Auto was the only one that managed to drop in trade. It was down almost 0.9%. Now, in terms of the companies at 52-week high, AI Engineering, Dabur, this Page Industries, Torrent Pharma post its numbers, Havells, all these companies continue to do well. Hardly any A group companies in the 52-week low. So the traction certainly seems to be on the positive side. Very muted flows coming in on the FI side. Sell growth of 6 crores. DI has hardly bought in anything, 87 crores in the cash market. And on a month-to-date basis, whatever FIs have sold, both of them have been net sellers, FIs and DIs. Both of them have been net sellers in this month itself. Now, as far as the Nifty was concerned, the Nifty was up 116%. What aided? HDFC, Axis Bank and ICICI Bank. So it was the private sector banks that led a significant amount of move. Only exception being HDFC Bank, which was down almost, which contributed a 5-point downtick on the Nifty, but otherwise it was a rather strong day for the Nifty itself. Now, in terms of how are the F&O markets panning out in trade, the Nifty saw open interest build up of 3% on the long side. Similar was the case with the Nifty Bank, open interest built up of 15% on the long side. Now, in terms of where positions are being taken, you're seeing that put writers are much more aggressive from levels of 1100 right up to 11,300, and call writers are now writing in at levels of 11,400 and 11,500 in trade. So actually, see a little bit of positions at that level. On Friday, what happened was that put writers were much more active. And since the market moved up above the 11,400 mark in trade, you saw shedding of open interest on the call side. Now, in terms of the stocks in the F&O band, Adani Power was there. Jet Airways comes back in the F&O band. It was down almost 6% in trade. So this is the new stock in the F&O band. As far as the PCR is concerned, the Nifty PCR moved up to levels of 1.672 from 1.64. The Nifty Bank PCR also moved up from 0.86 to 1.34 in trade. A couple of stocks that you want to watch out for. Torrent Pharma saw high open interest build up of 34% on the long side. Post the numbers, stock at 52-week high, the momentum probably will continue. Similar is the case with NIIT Tech, high open interest build up and the stock moving to new highs in trade. The two other counters is first of all PVR, which moved up on high open interest build up of 20%, and the last stock that I want to point out is Nestle, which saw open interest build up of 20%, but the counters saw fresh shorts post a weak set of numbers.
All right, Darshan, well, lots to look forward to. I just want to say before we move to the next thing that Kaushik Chinchwadkar says that he's very happy to hear from you in the morning.
Oh, thank you.
So I told him that I would tell you. Let's move on now and talk about commodities. Jayesh Kilnani is joining in with all the details here. Morning, Jayesh.
Morning, Alex. Let's start off with oil prices currently trading with a slight bit of positive bias. But remember that WTI has been holding on to its loss just below the 69 per barrel mark on the back of intensifying the US-China trade war concerns. Now, China, has threatened to levy retaliatory tariffs on goods worth about $60 billion of imports from the United States. And, the US president is actually happy about the supply concerns that have been there, and they have been tweeting as well. Now, if you look at the base metal space, the LME base metal index in fact closed higher on Friday, but there was some bit of renewed pressure on a weekly basis. Copper in fact climbed on the back of weakness in the dollar index, on the back of the Chinese currency move that you were just talking about. Zinc closed higher for the second straight day, and nickel in fact snapped its 2-day falling streak. Aluminium on the other hand declined for the 4th straight day in a row on Friday. And if you have a look at the Asian hours Shanghai Futures Exchange, most of these base metals are in fact trading with a positive bias. Lastly, gold prices, those have declined near the 1200 per ounce mark on the back of investors which are now shifting focus to the dollar index.
Thanks so much for that, Jayesh. Now, over the past few months, there have been several factors that have been affecting oil prices, but here's the latest. Security threats on 2 major shipping routes for oil could send gas prices soaring. Here's a special report.
Saudi Arabian oil tankers near the Red Sea were recently attacked by Yemen's Houthi rebels, leading the kingdom to take the extraordinary measure of halting shipments there. Why does it matter? Oil's journey from the Middle East to your local gas station takes it through some of the world's busiest and narrowest shipping lanes. A major disruption could send gas prices soaring. Oil's two main choke points are the Bab al-Mandeb Strait and the Strait of Hormuz. The first runs along war-torn Yemen, where Saudi Arabia has been locked in a bitter 4-year war. Markets mostly shrugged off the disruption because oil can still transit the other route. But it also casts a spotlight on the critical Strait of Hormuz, which carries as much as 30% of the world's oil. As tensions between the US, its Middle Eastern allies and Iran escalate, the possibility of supply being interrupted is rising. Iran has repeatedly threatened to block the strait, warnings that were renewed after President Trump took an increasingly hard line against Iran. Any disruption there would cause an immediate spike in global oil prices.
All right, on to perhaps the big event in the markets today. It's the largest equity asset manager in the country, and it is set to try its own luck on the bourses today. The subscription numbers were definitely impressive. Institutional investors bid for 192 times what was on offer. High net worth individuals 195 times. The retail portion was subscribed 7 times. Samit Sarkar is joining in to tell us all about the HDFC AMC issue. Samit, a premium listing is a given?
Yes, it is given the grey market premium. Now, the grey market premium is close to 580 rupees per share. That is a listing gain of close to 53%. So, let's see how the valuations would stack up at different price points for HDFC AMC. Now, at issue price of 1100 rupees, the market capitalization of the company was close to 23,300 rupees, 300 crore, while the FY18 price to earnings was close to 32.3 times, price to book was 10.8 times, while market cap as a percentage of asset under management was close to 7.8 times. Now, if it lists and the share prices are close to around 1500 rupees, then the market capitalization of the company would be close to 32,000 crore rupees, price to earnings would be 44.1 times, price to book would be 14.7 times, and market cap as a percentage of FY18 asset under management will be close to 10.7 times. Now, if it lists at a premium and the share prices are close to 1600 rupees, then the market capitalization of the company would be close to 34,000 crore rupees, price to earnings would be 47 times, price to book would be 15.7 times, and market cap as a percentage of AUM would be close to 11.4 times. Now, this is what the valuations would look up on the listing day, but let's see whether it would be right for the investors to invest at that kind of valuations. So let's see what the experts are saying. Now, Devin Choksi says that he would be comfortable with the valuation of HDFC AMC only if the share prices are close to 1540. That is a premium of close to 40% on the issue price. Vaibhav Chaudhary would advise investors to invest in the company if the share prices are not above 1,250. If it goes above that, then the valuations are demanding according to him. While according to Siddharth Kemka of Motilal Oswal, he believes that the valuations could be, if valuations are close to, if the share price are close to 1450, then it would be good. He would be comfortable in investing in the company. If it goes above that, then he would not be. And given the grey market premium, the prices are expected to be around about that level given by the investors. So let's see how what they say after the listing goes on.
All right, but Samit, why really are investors and analysts talking about such a big premium? Is it simply because of the HDFC brand name?
Well, HDFC brand name is one of the things, and we all know what HDFC AMC does. But if you see the offer, now it has around 133 schemes of which 27 are equity oriented, 98 are debt oriented, 3 are into liquid, while 5 are other schemes. Now this is an important chart. Now 47% of its mutual fund AUM is into equity, and this has been rising over the years. Now a rising equity AUM means that the total expense ratio allowed is higher, which works in favor of the asset management company. And secondly, if you see the number of SIPs and the average size of the schemes that have been seen for the HDFC AMC, now that has also been increasing. Now the total number of SIPs has increased from 19.8 million in FY16 to close to 30 million by the end of FY18, while the average size has increased from 3,000 rupees to close to 3,900 rupees. So this shows how HDFC AMC schemes are getting traction and why there's a lot of traction among the investors to invest in this company.
Now, if we're looking at comparisons and HDFC AMC's peers, how does HDFC AMC stack up?
Well, we have compared it with Reliance Nippon, which is the only listed peer, would be the only listed peer of HDFC AMC, and we have compared it with ICICI AMC, which is the largest asset management company in India. Now, the company's revenue, HDFC AMC's revenue, net profit and asset under management have grown at a compounded annual growth rate of 20%, 19% and 27.5% over FY14 to FY18. Now, these growth rates are better when compared to its listed peer, that is Reliance Nippon AMC, while the rates are comparatively lower when compared to the largest AMC, that is ICICI AMC. Now, if you see the unit metrics, that is revenue, net profit and total expense as a percentage of AUM. Now here HDFC AMC has the most profitable AMC tag because its net profit as a percentage of AUM is 0.24%, which is the highest in the industry, and that is because of the higher revenue that the company generates over when compared to its AUM, and because of comparatively lower total expenses as a percentage of AUM. However, when you compare these unit metrics to FY14 numbers, all the three numbers have declined compared to FY14. Lastly, on the return ratio side, if you see, the return ratios of the company are better than the listed peer, that is Reliance Nippon, but have lagged the return ratios of ICICI AMC. Now, for FY18, the return on equity was close to 33.4%, while the return on asset was close to 36%. Also, compared to last year, that is financial year 2017, the company's return on equity has declined.
All right, thanks so much for that, Somit. Now, as Somit told you, if the grey market is any indication, we're set for a premium opening today. Do stay tuned to that, and you'll see that during Indian Open or perhaps just after. Let's take a look at the earnings now. Titan's profit rose for the 8th straight quarter, surpassing analyst estimates, and demand concerns that were raised by the management in the mid-quarter update turned out to be overdone. Agam Vakil is here to tell you all about that. Agam, what are the key numbers and management commentary not really indicating the decline that we expected?
Well, no, not really, Alex. In fact, considering we have seen numbers come ahead of the Bloomberg consensus, it is turned out to be a quarter which hasn't been as bad as the mid-quarter warning that came through from the management. That said, we just saw about 6% growth on a year-on-year basis in terms of the jewelry revenues. This was, however, ahead of street expectations. And with the other important factor here is that there are now estimates of seeing 20 to 25% growth in the jewelry business over the next 3 quarters of the remainder of the financial year. And July specifically has seen a 70% increase, and that is something that can influence the second quarter numbers. And this is according to the management, and they've also said that they've continued to gain market share at the expense of the unorganized sector in the jewelry segment, and that is something which has led to growth. Let's not forget, they've also seen a rise of around 6% in the jewelry segment, and that's something that has come in aid of this specific sector. Coming down to watches, it's been relatively stronger. We've seen about near 15% growth, perhaps on a low base. That the volume stood out at around 10%, which means that they've also seen better pricing of as much as 5% in that factor. It's been a strong quarter on the back of a lot of product activations, as the management has been talking about over the previous few quarters as well. And the management is confident of sustaining double-digit growth in FY19. So it's certainly turning out to be a good quarter for the watches segment, which contributes to nearly 20% of the revenues. On the whole, a quarter which may have been subdued, but it's still better than street expectations, and the management coming through is relatively positive. So we're going to have to wait and watch as to what that means for Titan as we move ahead.
Thanks for that, Agam. Well, moving on, the GST Council over the weekend formed a subcommittee to address various issues faced by small businesses. The council also discussed a proposal to start a pilot to promote digital transactions. Nikunj Ohri sums up the highlights from that meeting in this report.
The GST Council today has approved constituting a group of ministers which would look into the issues and concerns faced by the MSME sector. Now, various suggestions were put, various suggestions received from stakeholders were put before the GST Council in its today's meeting, and the suggestions which require changes in the law will have been forwarded to the law committee. and the changes or the suggestions which required changes in GST rates have been given to the Fitment Rate Committee. Now, Fitment Rate Committee and the Law Committee would compile its report, and this report would be given to the group of ministers which will be headed by Mr. MOS Finance, Mr. Shiv Pratap Shukla, and they will compile a report with their changes, with their suggestions, and this would be put forward in the next GST Council meeting, which is scheduled in late September. Another decision taken by the GST Council is regarding incentivizing digital payments which are made using the Bheem UPI and RuPay cards. Now, consumers would get up to 20% of the tax amount as cashback, up to a ceiling of ₹100, and this proposal would be implemented on a pilot basis in some states first, like Bihar, Maharashtra, Gujarat.
All right, Shraddha Babla is now joining us with the stocks and news. Shraddha, what are the stocks you have for us this morning? Good morning.
Good morning, Alex. Top of my list is IDFC Limited. Now, this is on the back of a ET report which says that the infrastructure lender is in final negotiations with Avendus Capital to sell its broking and asset management business, and the deal is said to be valued between 5,000 to 6,000 crores, so watch out for that name. Wipro will settle National Grid lawsuit for about $75 million in the US, and they've said that the settlement is expected to reflect in the financials of the company in the second quarter. That is a quarter ended September 2018. You have ICRA, where the board will consider a buyback of shares on August 9, so watch out for that one. You'll also have the likes of Apex Frozen Food, Avanti Feeds and Waterbase, which will be in focus, and this will be on the back of the shrimp export numbers to US that have come. So they have fallen for the first time in at least 18 months. So the export is down by 2% in terms of volume and about 13% in terms of value as compared to the last year. So slight negative for all of these companies. You also had strong set of numbers coming in from Entertainment Network India. Revenue growth of 16%, net profit doubled to 9.3 crores, and EBITDA margins also inched up from about 16.4% to 23.3%. Gujarat Alkalis and Chemicals is another one to keep an eye out for. Very good numbers reported. Revenue growth of 38%, net profit nearly doubled to 183 crores, and again margins have inched up sizably from about 28% to 38%. However, Sickle Logistics disappointed with, despite a revenue growth of 32%, you saw that their profits declined by about 64%. EBITDA was also down by about 13% during the quarter, and that is because the cost service expense rose sharply by 41%. You also had PI Industries, which missed estimates for the quarter. So revenue growth came in at 9%, but EBITDA fell by 9% and net profit declined by about 18%. So missed there. And finally, Suzlon Energy, where revenues slumped by 50%. That led to a EBITDA decline of 83%. And the company reported a net loss of 572 crores as compared to a profit of 49. So those are some of the stocks to track.
All right. Thanks so much for that, Shraddha. Now, the world's largest elevator in China, which can lift a ship 40 stories high in just 10 minutes, may soon lose its title. Here's why. Well, that's all we have for you on this edition of Daybreak, but there's a lot more coming up on the other side of this short break on All You Need to Know. So do stay tuned. This is Bloomberg Quint.